Welcome to the Deep Dive. Today, we're taking a bit of a shortcut to getting you well informed on some really fascinating market movements you might have seen lately. We've basically sifted through a whole stack of sources. Articles, financial reports, data snapshots, all focused on companies making some pretty significant waves.
Right.
Our mission today: extract the most important nuggets of knowledge, the key insights from all this stuff.
Yeah, so you can quickly grasp what's driving their performance.
Exactly. And what it means for the wider market, often looking, beyond just the easy headlines. Okay, let's unpack this.
Absolutely. We're going to dive into 5 specific companies today. Each one has a pretty unique story, different catalysts driving things.
Yeah.
And the goal really is to connect the dots, understand not just what happened, but maybe more importantly, why it matters.
Giving you that comprehensive view without the information overload.
Exactly.
All right, first up, let's look at BUA Cement PLC. They're based in Nigeria, and, well, they recently delivered quite an earnings surprise.
They really did.
We saw their stock price jump, what was it, over 4.5% recently?
Yeah, 4.66% actually. And that actively contributed to the overall market cap increase on the Nigerian exchange. The StayLive.com reported on that.
Okay, but what's the deeper story? Why the surprise?
Well, the deeper story is definitely in the numbers, and they're pretty compelling. Our sources, including analysis picked up by Yahoo Finance and MarketBeat, they show BUA Cement's Q1 2025 margins really improved, like greatly improved.
Greatly improved how? What are we talking about?
Okay, so their TTM profit margin that's trailing 12 months, looking back over the year, hit an impressive 37.54%.
Wow.
And their ROE, return on equity, which kind of shows how efficiently they use shareholder money, right?
Right.
That was a very strong 31.41%. So these numbers really pop.
Those are robust numbers. So
Yeah.
what really drove that? I mean, it's such a dramatic improvement in margins. It could be a tough market.
That's the really interesting part. Their revenue surged, get this, by over 95%.
95.
Yeah, to $615.77 million. And net income, it soared by over 126% to nearly $84 million.
Okay, so that's huge growth.
It really is, and it points to something more than just, general market conditions. It suggests maybe strategic pricing or perhaps improved operational efficiencies.
Or maybe just a big surge in demand they were ready for.
Could be that too. A specific mix they were uniquely positioned to capture. It's a very clear signal that strong operations, when they meet market opportunity, that's still a powerful driver for investors.
Definitely translates into confidence. Okay, from that earnings beat in Nigeria, let's pivot pretty sharply. We're going to look at how one company is positioning itself for, arguably one of the biggest tech trends right now, AI.
Yes. Talen Energy.
Exactly, Talen Energy.
Sure.
They're making headlines with a really big strategic move, and it seems directly aimed at supporting AI data center power demand.
It absolutely is. Talen just announced they're acquiring 2 gas-fired power plants, one in Pennsylvania, one in Ohio. Costing $3.5 billion, but it's part of a larger, $7.5 billion acquisition plan.
Wow.
And this adds a substantial 3 gigawatts of power capacity. And it's in the PJM region, which is a critical electricity market in the eastern U.S.
Okay, 3 gigawatts is a lot of power.
It is. And what's really strategic here, I think, is their plan to integrate this new capacity with their existing nuclear power supply.
Right, for clients like AWS, the article mentioned.
Precisely. So they're combining power sources to meet that massive AI demand.
That is a huge play on the AI boom. But okay, $7.5 billion overall. What are the anticipated payoffs? And I guess, what are the risks? It's a big bet.
It is a big bet. But the anticipated impact, according to sources like Benzinga, Investopedia, Barron's, they're projecting a massive increase in free cash flow per share, FCF.
Oh, massive.
We're talking over 40% increase by 2026.
40%.
And potentially over 50% by 2029. So analysts are really bullish.
You mentioned analysts.
Yeah. Sentiment is incredibly strong. Firms like Jefferies, UBS, Morgan Stanley, they keep raising their price targets. Some are going as high as $399 a share.
Okay, that's serious confidence.
Yeah.
And what about the current numbers? Anything cautionary there?
Well, yeah, there's a nuance. Their current EPS, earnings per share, is actually down year over year, about minus 37%.
Okay. So why the optimism then?
Because that EPS dip likely reflects the immediate costs of the acquisition. But look at revenue. It's up almost 69% to $3.2 billion.
Okay.
And their TTM profit margin is 63.50%, ROE is 29.32%. So the market sees this as a strategic investment with huge long-term payoffs, even if it hits short-term EPS. It's a clear response to that AI infrastructure power crunch.
A calculated risk for future growth.
Yeah, guys.
Okay, so we've had an earnings surprise and a big strategic AI play. Now let's dive into something a bit more mysterious.
Intriguing.
Chengdu Konghua BI. This one stands out because their shares were actually halted from trading back on July 14th.
Right, and a trading halt like that, it usually signals something significant is happening behind the scenes.
So what's the potential signal here?
Well, according to Market Screener, the halt likely points towards a potential ownership change, maybe through a public share sale or possibly some kind of structural reorganization.
Okay, an ownership change.
Mm-hmm.
But what makes this one particularly interesting, especially with the trading halt and, as you mentioned, some recent financial struggles?
It's what the company has, its underlying assets.
Which are?
They hold valuable bio-vaccine licenses. We're talking things like human rabies vaccines, meningococcal vaccines. This is confirmed by sources like Feudable and, their own website.
So real technical value there, patents, licenses.
Exactly. Significant inherent technical value. And here's the kicker. Our sources are actually highlighting this company as undervalued with a strong buy rating.
Strong buy, despite the trading halt.
Mm-hmm.
And you said financial struggles.
Yes, despite all that. And despite a high PER price-to-earnings ratio, which usually makes a stock look expensive. And yes, the recent financials aren't great. Revenue's down almost 22%.
Ouch.
And net income down over 50%. EPS also down 50%.
So, okay. Yeah. Financials look pretty rough. High PER, trading halt. Yet it's a strong buy. That feels like a gamble, doesn't it?
Yeah.
Based on just speculation.
That is the critical question, isn't it? And what's so striking here is how the market, or at least these analysts, seem to be looking right past those current operational struggles.
Focusing purely on the potential.
It appears so. The potential for that ownership restructuring, combined with the inherent value of their vaccine technology, that seems to be the main catalyst driving the interest. It's a classic case, really, of how future potential, especially if it's tied to valuable IP or a big structural event, can sometimes just outweigh the current messy numbers.
Like a financial detective story trying to figure out the why.
Exactly. Sometimes the lack of a clear headline is the story.
Indeed. And sometimes the quietest signals are the loudest,
Yeah.
right? If you know how to listen. Which kind of leads us to our next one.
The quiet performance.
GMOILD Ltd, General Development Corp. This one's, a bit of an enigma. Our sources really couldn't pinpoint any specific, recent, good news headline driving things.
Right. No obvious catalyst splashed across the news.
But despite that, there's been really strong market activity. High trading volume, 47 million shares?
Yep. Significant volume. And impressive performance growth, too, double digits. Revenue increased by 15.7%. And net income by 11.1%.
Okay, so lots of market interest, good growth, but no big announcement. What does that usually suggest?
Well, it often raises the question, what's driving the interest if it's not a headline? And the data points towards solid underlying financials, like a TTM profit margin of 31.04%, an ROE of 10.95%. Revenue hit $333.61 million, net income $80.25 million, and their EPS is up over 11% year over year to 0.25.
So fundamentally sound.
Exactly. And when you see this kind of consistent, solid performance, decent growth, high volume, but without a splashy headline, it often signals something else.
Which is?
It often means that, institutional investors, or maybe those with deeper insights, they're recognizing fundamental improvements or maybe long-term value before it hits the mainstream news cycle.
Quiet accumulation.
Precisely. It underscores that big market moves aren't always driven by a press release. Sometimes it's just strong, steady performance finally gaining traction with those doing the deep dives.
Challenges that assumption that you always need big news for big moves. Okay, final deep dive. Let's look at Invesco Ltd, a financial firm, an asset management powerhouse that just hit a pretty major milestone.
Yeah. Invesco, their stock surged over 15% just on July 18th.
15% in a day.
Hit a 52-week high, and a big part of that fuel was an increase in their assets under management, their AUM.
How much did that grow?
It grew by 3.0% just month over month by the end of June, pushing them past the $2.1 trillion mark in AUM. That number came from pnewswire.com and biopharmcatalyst.com.
2.1 trillion. That's a lot of assets.
It certainly is, but there's actually more to the story than just the AUM growth.
Okay, beyond AUM, what else is playing into this surge? And actually, thinking about their financials, Their ROE is around 3.5%, right? Which, I don't know, seems a bit low for such a big financial player, even with a high profit margin. What's that about?
That's a sharp observation. And you're right, the ROE at 3.51% might seem modest on its own, but what's really standing out for Invesco is how multiple factors are kind of aligning right now.
Okay.
Yes, their TTM profit margin is very high, 63.86%. Revenue's up 5.69% to $6.11 billion. For an asset manager, though, that sheer scale of AUM and the consistent fee income it generates are often key metrics, sometimes more so than ROE alone.
Right, the fee generation machine.
Exactly. But also, the market's anticipating a QQQ ETF reclassification application.
Ah, the big tech ETF. What does that matter for Invesco?
Well, QQQ is one of the most popular ETFs out there. Any reclassification or changes can have ripple effects for major asset managers like Invesco who deal heavily in these kinds of products.
Gotcha.
Then you add increased options, liquidity around their stock, and also their appeal as a GARP stock that's growth at a reasonable price.
Because of a low PEG ratio.
Right. MarketBeat noted that. A low PEG ratio often signals, potentially undervalued growth. So you put it all together.
The AUM growth, the QQQQ anticipation, the JORAP appeal.
Exactly. Plus, maybe broader factors like inflation concerns easing a bit. It all creates this powerful positive momentum. It really shows how shifts in the bigger economic picture, combined with smart strategic positioning, can unlock significant value, especially for financial services firms.
It's a confluence of factors working together. Okay, so let's zoom out. What does all this mean for you, the listener? We've covered a lot.
We have.
From, that earnings surprise in cement driven by operational excellence,
to the massive strategic AI power play from Talen Energy.
The intriguing ownership change hinting at future value in biotech, despite current numbers.
That quiet fundamental strength attracting smart money to GMOIL DLTD.
And finally, that multi-layered growth story at Invesco in asset management. It's really a diverse set of catalysts driving these big market moves, isn't it?
It really is. And these examples, I think, truly illustrate that market value. It's influenced by so much more than just, top-line growth or a single news headline.
Right.
It's about strategic foresight. It's about that underlying fundamental strength we talked about. And sometimes, it's even about anticipating future changes, whether structural or economic.
So really digging into the why behind the headlines gives you that much richer picture.
Absolutely. Critical thinking is essential, especially now with so much information flying around. Understanding the why gives you a much more complete view.
Absolutely. And that wraps up another deep dive into the sources you provided. We really hope you've gained some valuable insights, maybe some surprising facts today.
Hope so.
And now, something for you to mull over. Considering all these varied paths to market success we explored today, the surprises, the big bets, the hidden value, the quiet performers, what kind of signals, maybe beyond the immediate headlines, do you think are the most important for spotting that next big opportunity?